So today we ended up seeing some selling pressure take place in the broader market simply because we ended up seeing inflation come out a bit hotter than expected. But in this video, I want to go ahead and highlight why today's inflationary report isn't necessarily such a terrible one, and also touch on what are some things that we're going to want to monitor as we move forward. Now, I want to go ahead and highlight this graphic from Yahoo Finance, not because it's such a detailed graphic, but honestly because it's a very simple graphic that's going to be easy for everyone to follow along with. Now, if we take a look right over here, we're seeing where inflation is and isn't from a 12-month change in prices. And notably, what we're seeing here is that although car prices and food costs are showing signs of disinflation with decreases as anticipated, we're seeing this spike in auto insurance rates, which has not subsided as expected. But I also want to point out that it's important to note that auto insurance rates don't immediately decrease with falling car prices. There's usually a delayed reaction. And so the main drivers of panic from this report really stem from shelter and also service inflation. But I just showed you guys that we're seeing car prices come down, and eventually we start to see auto interest rates start to come down afterwards. But again, it doesn't immediately fall down below. But I also want to highlight something else that's pretty interesting. And that is the fact that over on the north side of the border, we had the Bank of Canada, which is a central bank over there, hold its interest rate policy steady at 5%. Now, this was expected, but what was interesting was that the Governor Malcolm said that we are seeing what we need to see to lower policy interest rates, but that we need to see it for longer to be confident that progress towards price stability will be sustained. He also went along and said that June rate cuts were still within the realms of possibilities. So look guys, I completely understand that the Bank of Canada, the central bank over there, and the central bank over here, the Federal Reserve, those are two separate central banks. But the reason why I point out kind of that optimism from what we're hearing in the north side of the border is simply because although these are separate central banks, they kind of end up following along with each other, kind of synchronizing with each other. When one does one thing, the other kind of follows along. And so we are still seeing or hearing some optimism from the central bank in Canada. But from an opposite point of view, we're seeing some pessimism with some of the financial firms over here in the United States. For example, we recently heard the economists at Wells Fargo now only predict 2 cuts for this year of 25 basis points, one in Q3 and one in Q4. And so we're currently in the middle of the road in terms of uncertainty, which is why I told those within the Push and Profit private group that we're gonna want to pay extra attention to what we're getting tomorrow, which is the PPI, the Producer Price Index, as that's gonna give us kind of a more clearer outlook on what's going on with inflation. And that's actually an economic report that a lot of people or the broader markets tend to ignore, but it's something that we're gonna kind of wanna pay a little bit more attention to. But now bringing a bit of politics into the conversation, which by the way guys, I'm not much of a fan of any of these politicians, but I wanted to kind of share how today we interestingly had Joe Biden provide some commentary on this report stating that he still sees rate cuts before the year's end. In fact, he ended up saying that the Fed may delay cutting by a month or so, and that it still may end up happening, that we're going to get those rate cuts. Now, this is funny because of course Joe Biden is going to say that, and the reason is because this inflationary report, the headlines don't really look too well for his political campaign. And the reason I say this is because America, or Americans, vote with their wallet, right? Of course, presidents have some influence of what goes on in the overall economy, but they don't control everything that happens in the global economy. But the reality is that whatever takes place within the economy, the sitting administration is going to take some blame. And now when we're seeing these reports of inflation looking kind of bad from the headline perspective, well, that doesn't bode too well for Mr. Biden. And so, of course, President Biden is kind of letting everyone know, hey, we're going to get rate cuts. We're going to get rate cuts. It just may slightly be delayed because, of course, the numbers are not looking too well for him. But again, not much of a fan of any of these politicians, right? Just wanted to share that he just ended up actually providing some commentary on today's report. But with that said, I want to go ahead and highlight what are some things we're actually seeing with the broader markets from a technical perspective, as well as just cover a few additional topics as well. So we're going to go ahead and hop into my laptop, But before we do so, just a friendly reminder that if you have not done so already, consider tapping that subscribe button so that you don't miss out on any future upload. And while you're at it, consider checking out the links in the description below, because one of the links is going to be a link to join the Push and Profit private group, where every single day the markets are open, I provide a daily briefing of what are some things I'm looking at in the broader markets, as well as sharing some trade ideas. And again, guys, it's going to be the first link in the description down below. But with that said, let's go ahead and hop into my laptop.
Alrighty, so we are officially in my laptop taking a look at SPY, the S&P 500 Index ETF, and we ended up seeing the day slightly with a green candle, although if we actually look through, we are definitely much lower than the day prior. Now, the reason why you see a green candle on the daily chart is simply because we closed slightly higher than what we actually opened in the morning, but we still, day over day, fell down approximately about 1.3% down. Now, this honestly isn't horrible, and as I mentioned in the past to those within the Push and Profit private group, this may honestly provide us with leverage to take advantage of a dip buying opportunity. And this is something that we talked about in the past. In fact, I shared this exclusively for those within the private group on how back in the 12th of February, we had the CPI report, and that was a dip buying opportunity. You saw the market pretty much push forward, and then we also saw the same scenario take place last month as well. And so we've been seeing kind of the markets overreact to this, these inflationary reports, and then proceed to go ahead and push forward. Now, I'm not still giving the green light yet that this is happening once again, because I still want to wait for tomorrow's PPI inflation report, which is a producer price index. But this may just be another dip buying opportunity. And one of the things I talked about in this previous CPI reports within the Push and Profit private group was this idea that though there were seasonal anomalies, right? And interestingly enough, I want you guys to take a look at this. So today, yes, we had the CPI report, but guess what else we got? We also had the meeting minutes from last month. And one thing that's pretty interesting is that we had Jerome Powell say that it's possible that the 2 months reading for January and February might have been caused by seasonal issues. And that's exactly what I talked about within the Push and Profit private group. We definitely see those as opportunities to buy the dip. And now we're having the Federal Reserve even observe, or say that those might have been anomalies, just seasonal anomalies, right? There's health insurance that typically tends to spike up over the new year, and there's a couple of other pieces of information that is a bit lagging. And as I showed with that Yahoo Finance graphic earlier, it's really service inflation, and the biggest thing is auto insurance. But I don't necessarily believe auto insurance is going to be the main decision that causes the Federal Reserve to really delay those rate cuts. And so that's ultimately what we're kind of looking at. And again, one of the things I told the Push and Profit private group is that this might just be another green light to buy the dip in terms of the broader market index. And again, we are waiting for that PPI report. But I also want to highlight some of the ideas that I shared within the Push and Profit private group. For example, we're still seeing XOP do well. This was a swing trade idea I shared for those within the Push and Profit private group right around over here. So this is still up quite a bit. And then gold is actually, it did come down again a little bit just from its recent highs. But gold has been a trade idea that we shared a while ago as a swing trade idea within the Push and Profit private group. And that's doing just fine as well. Now, I did introduce some potential other ideas in the private group. And again, if you want access to those trade ideas, it's going to be the first link in the description below. But I want you guys to comment down in the comment section down below. Do you guys think inflation is going to be a problem, or is it honestly something that is behind us, right? We have two opposing thoughts. We had Jamie Dimon of JP Morgan recently state that inflation may be stickier than what we initially believe. And then we have Tom Lee of Fundstrat say that, look, inflation is honestly not a problem. So there's quite a few opposing opinions out there. When we take a look at SPX, which is the same thing as the S&P 500 index, we are slightly below this kind of support that I've been talking about for a bit within the private group, but we are still within range, so it's not necessarily horrible. And again, we are going to monitor how this looks with tomorrow's report, and of course I will provide an update for those within the private group. But I also want to highlight something else, and that is the fact that also on top of having this headline CPI report look a bit hotter than expected, We also had a pretty much auction for the 10-year treasury yield that wasn't necessarily a good auction. And we ended up seeing the 10-year treasury yield spike upwards. And so that provides some selling pressure for the markets. And so that's something that may provide some a bit of selling pressure and some consolidation for a bit before we kind of have that bounce. And that's why this time it's not like the last times where I said, look, I think buying right after the CPI report is like a dip buying opportunity. That's why I'm being a bit more patient waiting for tomorrow's data. But additionally, I also want to highlight this tweet from Fundstrat that kind of shows us where we are, right, in terms of earnings season. For those of you guys that don't know, we are starting earnings season. We're going to have earnings for a lot of the major companies. We're going to go ahead and talk about, of course, Tesla's earnings once it comes up, because I want to provide a fundamental update on Tesla, as I often make a lot of content around Tesla. But Fundstrat made this tweet stating that of the 21 companies that have reported so far, which is roughly just 4% of the S&P 500, overall, 86% of them are beating estimates, and those that beat are beating by a median of 9%. So far, although it's just a small sample, they're doing pretty fine. Of the 14% missing, they're missing by a median of below 4%. And so on the top line, overall results are beating estimates by a median of 2% and missing by a median of negative 2%. And 43% of those reportings are beating estimates. And so it's right now, of course, still too early in terms of how companies are doing from a fundamental perspective. Again, it's only been 21 companies, but I just wanted to kind of let everyone know that we are entering into earnings season, and that's going to also be another driver for the market. So we may have some big movements and some big shifts come, especially if we either have a continuation of some positive earnings. If we still see earnings do well, guess what? It's upside from here, despite everyone still believing that the market's going to go ahead and crash, right? Of course, we have to be mindful of any potential black swan event or if earnings end up coming bad. But so far, earnings season is starting off a little on the right side here. So with that said, I'm going to end this video here. No need to make it any much more longer. Again, subscribe if you haven't done so already and if you see value. And before you guys go, make sure to check out this next video right over here. And I'll see you guys on that next video. Take care, guys.